This is Inside the Wolf's Den, an entrepreneurial journey with Shawn and Joni Wolfswinkel.
Welcome back to Inside the Wolf's Den with your hosts, Shawn and Joni Wolfswinkel. Today we have a special guest in the house. We have the one and only Marc Cunningham. How are you, Marc?
Well, thank you so much. I'm doing great. I appreciate the opportunity to be here with you guys.
We're so glad that you are here with us today. So just a quick bio on Marc. So Marc Cunningham is the CEO of Grace Property Management and Real Estate, a Denver-based company with deep family roots that has grown into one of Colorado's most respected property management firms. A second-generation leader, Marc took the helm of Grace and transformed it into a model of operational excellence, helping rental property owners across the Denver metro maximize returns while delivering an exceptional resident experience. Under his leadership, Grace became known as not just for managing properties, but for building systems, culture, and processes that set a high bar for the industry. Beyond running Grace, Marc channeled his passion for elevating the property management profession by founding PM Build, an education and training platform designed to help business owners sharpen their skills, grow their portfolios, and build companies worth owning. His dual role as operator and educator made him a sought-after voice in the property management world. In a landmark move, Marc recently sold Grace Property Management to Rhome, marking the culmination of decades of intentional business building and the beginning of an exciting new chapter. So excited for you.
Wait, I've got to interrupt. I got to ask. You guys wrote this bio for me. This is AI, isn't it? Because that's really well done. I'm guessing Shawn didn't sit down last night and be like, okay, what do I know?
I am that talented. No.
AI at work.
AI in the works, yes. But
okay.
I thought it did it. I thought it did an
that bio for the next time I go somewhere.
Yeah, I thought it did an excellent job, and I think it's all true.
Yeah. So Marc, as we can see, you've got lots of titles. Why don't you give us a 60-second version of who you are for listeners who maybe haven't crossed paths with you yet?
Yeah, I'm in Denver, Colorado. Back in 1978, my dad decided he would start a property management and real estate business, Grace Property Management. So he opened that. I was kind of employee number one because I was free child labor. Mm-hmm. So he would have me doing whatever needed to be done. I mowed a lot of lawns, painted a lot of houses, cleaned a lot of dirty properties, trashed out properties. So I grew up in that world, kind of gave me a unique view into real estate, into business. I'd spend my summers working for him as I went through high school, and I just loved real estate. I bought a fair amount of real estate. I have a degree in finance and real estate, so I did some things in the multifamily world, the commercial world. I never wanted to work for my dad. That didn't sound too impressive to me, but I did. He offered me a job. This is 25 years ago or so, coming back to work for his company at the time. So I took that opportunity. We were small, 110 doors, I think, at that point in time. And we just kind of growing slow and steady over the many, many years. He retired a couple of years ago. And today we manage about 1,300 doors in the Denver area. Plus we do commercial as well. We've got a commercial division. We do have a real estate sales division. And our mantra has just always been follow the opportunity. What's the opportunity in real estate today? And let's go chase that. Yeah,
I had the awesome opportunity to meet your dad a couple of weeks ago in Phoenix.
Yes.
And a tremendous gentleman, and had great conversations with him as well. And so, but he always spoke extremely highly of you every time he mentioned you. And it was an interesting perspective because he said you were the one that came in and you run a tight ship, and you were. I thought he would be that stern one, and it seemed like more like you were the stern one in the business. But
I know we'll talk about this, but it is interesting. Like very early on, he kind of gave me the reins, and it wasn't like a conversation to be like, okay, you're the boss now. You start doing that. But that's just how I'm wired. I mean, we wouldn't have worked together well if he would have micromanaged me. I'm a little bit more just kind of a type A, just go. Mm-hmm. And so he very much just kind of like let me do what I wanted to do, and it's worked out very well. I don't know how he did it. Kudos to him. I couldn't do that with my kid. I'm way too much of a control freak.
I don't think we could do that with our kids either. So
most people couldn't. Yeah. Most people couldn't. Yeah. But he did. So I give that to him.
Yeah. Well, talk a little bit about that because my dad, both my mom was a doctor but owned her own practice, and then my dad owned his own business. And growing up, I was similar to you. He did a custom cabinetry business, and so I grew up sanding cabinets and staining and all that mess. I didn't want anything to do with that when I got older, but I couldn't work for him, or I couldn't do that. I couldn't. Yes, it'd be great to take over a business that's existing and already operational, but I just couldn't do it. And my son and I bump heads a lot because we have very similar personalities. So I don't know we could work together either. So I talk about that dynamic. I think it's very hard. How did you guys structure like the day-to-day operations and separate? I like this question. Like separate the dinner table from the boardroom. How did you?
Love that.
And I know your dad gave me some insight to that, but I'd love to hear your perspective.
We were very intentional about separating family from the business. I mean, and I've always said, kind of the little answer is we're not a family business. We are a business that happens to have employees that are some family members, right? And it's nuanced, but that's an important distinction. So it's not like, hey, all the kids get to come work in the family and we have jobs for all the family. That's not what it is. We are a business, and we treat each other within that framework. So for example, like that early on when I first started working there, I never called my dad at the office. He was Alan, because why? We're separating the family from the business. Dad? No, he's not dad in the business. He's Alan, and he's my boss. And another like small example, I remember early on when I was working there, sometimes he'd go out in the afternoon and get coffee. I mean, it's 3 p.m, run to Starbucks or whatever. And he'd be like, hey, can I get you a cup of coffee, or I'll bring you, what do you want? I'll bring you a chai latte back, or whatever. And after a few days, I said, you shouldn't do that anymore. And he said, well, why? And I said, well, you're not doing it for anybody else. Right? You're not offering anybody else coffee. Why does Mark get coffee? Well, it's because I'm your kid. So it just sends the wrong message, right, to the rest of the staff.
Yeah.
So it was like those little nuanced things of me recognizing early on, and there was only like 4 of us in the office very early on. Yeah. But recognizing that I need to earn it, type of a thing. And we've carried that all the way through. My brother works in the business and owns a portion of the business as well. He came on a couple years after I did. And so it was the same thing. It was all just when we're in the office, we put on our business hats. We're not family here. We are here to do each other work. We have accountability, and separating those things, and it's worked pretty well for us.
Yeah. Do you have is there a next generation at all in the business, or did it end?
Not really. I mean, my daughter worked for us for a year and a half, and she did great work in our accounting department. But even when she wanted it, she was looking for a job, and we had to hire somebody for accounting. So I said to my VP, Jessica, I said, hey, interview my daughter, Micah Joy. And if you think she'll work, great, bring her on. If you don't think she will work, don't bring her on.
Yeah.
So that level of this, she's your hire. And I said to my daughter, hey, if you get hired, you got to work twice as hard as anybody else, because everyone's going to think you're here because you're my daughter. And she is a very smart numbers nerd. And so she killed it in that role. And when she decided to go do something else, my VP was very sad and didn't want her to leave. But no, my son has done a little bit of work for us, but there was not a clear path of, hey, here's the next generation coming in to run things.
You're the dynamic between your brother and you. Again, I couldn't work with my brother, but oh god, I could just. I just cringe
Hopefully
thinking
he's
about
not hearing this right now.
Cringe thinking of it. This is a counseling session for Shawn.
Yeah,
right,
if I wouldn't.
But lay down on the couch. Tell me about your relationship.
Yeah, we won't. That's a whole episode. I need to lay down on a couch But no, he's a good guy. I'm not going to take that, but he does listen to the show. But to talk about I guess between the 3 of you, did you guys set because we haven't had a lot of family dynamics other than like Joni and I as husband and spouse, but did one of you supersede the other? How did you make decisions when it came down to the business? Did one have, say you disagreed on a point, did one was the ultimate decision maker? I'm just curious those dynamics.
Yeah, so my brother's 8 years younger than me. I came in the business 5, 6, 7, 8 years, I don't even remember now, before he did. And we have different roles. Yes. So I'm for many years, I was the president. That was my role. I'm CEO today, which is kind of the same thing, the way we're structured that way. And he did report to me for many, many years, actually. And then, so he runs our sales side of things, but I am his boss. Yes. So if there ever was I don't want to say conflict, but if there ever was a call to make a decision, that was going to rest with me. type of a thing. And to give him credit, he was very humble that way of, hey, recognizing, okay, I think we should do X. And sometimes I'd be like, yeah, I don't think we should do X. And he'd be like, okay, you're the boss, type of a thing. And so I give him a lot of credit that way. And there wasn't a lot of that. It's not like he was asking for things all the time and I was saying no. But I remember he said, I think we should spend some money on marketing. This was on our sales department, doing some radio advertising. This is 20 years ago or whatever. And there were some radio spots and things. And I said, I just don't think that would be a really good use of our finances. And he was like, okay. So we really never got into that conflict because he's not quite as type A as I am. If he were to be, then this probably wouldn't have worked as well. But from a technical standpoint, that's one of the reasons it's worked so well, because I recognize my role. I try not to abuse it. But those are the roles we're in. And so we take our roles very seriously, but not ourselves.
Yeah, that makes a lot of sense.
Yeah. So Marc, I'm glad it all worked out for your family. For entrepreneurs who maybe are considering bringing family in, what's your honest advice to them?
You don't bring them in because they're family. You bring them in spite of the fact that they're family. Right? Like my daughter, she is so good at accounting that overshadowed the fact that she was my daughter. So I think you have to look at that family member as like, that's not a positive. That's almost a negative. Mm-hmm. Are you going to bring them in spite of that? They have to overcome that because it's going to naturally present some hurdles. My brother, when we first hired him, we hired him in leasing. He came in to run our leasing team, and he had done leasing for a big national apartment complex. So he was awesome at leasing. That's why he got the job, not because he was my dad's kid. We looked at it from that realm of, he's got to overcome that. So you never hire, in my opinion, never hire family because they're your family. You hire because they can come in and kill it. That is the best person that there can be for that. And we also kind of had the soft rule of we wanted family members to work outside the business before they ever came in, so that they can get a sense of real world, not just, you don't just jump from this is your first job and you never do anything else other than that. So with those kind of first principles, it played well for us.
Yeah.
Love that.
Did Denver's dramatically changed over especially recently, but talk about how you evolved your business over the years, how you kept that pace of growth. And we both share a very common friend in your market. So he was like my mentor when I first got into this business. And so I understand Denver a little bit and what's happened, and you guys are very similar sized businesses and everything. So just tell me how you guys kept pace and how you evolved over the years and any key aspects that you want to point out.
You're talking about Greg?
Yes, yeah.
Greg's a good guy.
Yeah,
I like Greg.
Yeah.
If Greg listens, I'm always just one step ahead. That's what I try.
He's been on the show.
So
he's been on the show.
Greg, here's that. Greg, you know that. I always try. That's my key. I just stay one step ahead, Greg. I think it goes back to kind of what I said earlier. Of one of our first principles is to always be opportunistic. We're not goal driven. We're not numbers driven. We're opportunity driven. Mm-hmm. What's the opportunity today? And so we have grown, but we've grown as a result of being opportunistic. So looking for the needs in the market. So for example, in a couple decades ago, when the housing market collapsed and you could buy condos for less than the price of a used car, what was the opportunity? It was to buy the stuff on sale. And so we bought a fair amount of real estate. A number of years ago, when the market kind of got overheated and it was getting kooky with people just paying obscene prices, what was the opportunity? To sell at a high price. We sold out of a lot of that stuff. When investors came into our market, we worked with a lot of investors. Investors aren't in our market anymore. The numbers don't pencil in Denver. So now we look at accidental landlords and go that way. So by kind of not looking at what's in front of us, but trying to look out what's out ahead of us and around the corner of us, that I think is what has allowed us to grow, is thinking strategically, thinking long-term, and positioning ourselves to take advantage of whatever opportunities we believe are happening in the future.
Oh, that's a great idea. Do you, are you the visionary for your business, and are you the one that usually sees those around the corner or sees those opportunities?
That's my job. Yeah.
Yeah. And what do you do?
I have to be. I better be.
Yeah.
Yeah. Do you? This is a personal question. What do you do to do you take like a thinking day? Do you take time to really, or do you spend time like seminars or like conferences where we just met and to hear what's going on out there? What do you do to really to stay ahead?
I bet aside from inside the Wolf's Den today, I bet today's your thinking day, right, Mark?
You're right, Joni. Today, yeah, it's Friday. It's Friday. Yeah, Shawn, that's a great question. I've been very intentional with that, right? Because what's the job of a CEO? Like, what is the job description of a CEO? It's really hard when you're the business owner to know what your job is, because we feel, if we're having that thinking day, to use that terminology, that feels really lazy, doesn't it? And if you're a type A go, you will feel lazy when you start to actually embrace what your true job is, which is to take the business forward, because it requires a lot of thought. And it's double hard today because there's so much noise in our industry.
Right.
There's so many podcasts, no offense to you guys and me both who do podcasts, right? There's so many podcasts, there's so many newsletters, there's so many emails, there's so many periodicals, like there's so much noise coming in. Yep. Everybody has their different opinion and everyone's like, this is the thing, right? If this is the thing of the month. And so it's really hard to shut that out and say, gosh, I need to focus on the future of my business in my realm. So I remember very vividly, this was 10 years ago, thinking like, hey, I need to start carving some time out for CEO level type work and thinking that way. And so I said, I'm going to start taking a half day on Fridays for that. And I thought, I'm going to work from home on Fridays. This is before we had any work from home, remote type stuff. I'm going to work from home on Fridays. That was my goal. And then on those Fridays, I'll do higher level work, thinking about moving the business ahead and strategic planning. And I said to my wife, hey, can I convert our little living room area here in the house we live to a home office? Because if I have a home office, I'm going to work from Friday. And my wife, in her wisdom, she goes, okay, when you work from home 4 Fridays in a row, I will let you convert this area into your home office. I said, okay, deal. Shawn, Joni, no joke. It took a year. It was a year before I hit 4 Fridays in a row. Because you guys know how it is, right? I mean, it's Friday and you're busy, and I just got to run to the office for this, or I got a meeting, I got to whatever. It was really hard. And finally, I started doing that. I started working from home on Fridays, and it was so impactful for the business. It started moving the business forward. And I remember saying to my VP at the time, Jessica, she's still with us. I said, Jessica, I'm feeling guilty. Like, I'm not here on Fridays. As the boss, shouldn't I be setting the pace, right? Everyone says I should be the first one here and the last one to leave. And like, shouldn't I set that example? Like, is it okay that I'm not here on Fridays? Do people think I'm out playing golf and sleeping? And I remember she goes, Mark, you not being here on Fridays is the best thing you can do for this company. Yeah. And I had to kind of process that for a minute, but because she said it is a different vibe, right? The boss isn't here, but people can't come to you for answers. They've got to figure things out. And we know you're doing your work. Like, we know the business is moving forward. So taking that 1 day a week then turned into 2, and then turned into what sometimes can be 3 now. But it's not like I'm at home resting. I'm determining and reading and not listening to a lot of the periodical stuff, but figuring out what our next plans are.
Awesome.
I love that.
Could a virtual assistant be your best hire this year? See how a remote team member from True Work Logistics can save you time and money. Running a business takes time, and many owners get stuck doing tasks that don't actually grow the company. If this sounds like you, it may be time to hire a remote team member from True Work Logistics. We connect entrepreneurs with highly skilled virtual assistants from around the world so they can offload repetitive tasks and focus on revenue growth and more time for what matters. Let True Work Logistics help you do the same. Contact us today and see how a skilled remote team member can transform your business.
We took, Shawn does the Fridays occasionally. Not every Friday.
It used to be consistently, and then
Shawn, you got to get back to that, man.
The biggest problem is we hired, so we have somebody that helps us with the kids and house stuff, like nanny stuff, or like stuff we don't want to do. And so she's always at her house, and so like it's messed up my flow, because then there's somebody in the home, and I don't know, I just couldn't do it. So to be honest with you, we are looking at renting space just so I can go somewhere.
For his Friday.
Sounds ridiculous, right? But
no, I get it though, because you need You need that space. So are you guys, I have a question for you guys, kind of on the same line of thinking here.
Yeah.
Which one of you guys is more that visionary?
That's me.
That's you.
Yeah.
Okay. And Joni, how would you describe yourself?
More of the operator. I kind of help on the operations side. So.
Yeah.
And are you guys from a structure, are you guys equal in, like, do either one of you report to the other, or how does that work for you guys?
Yes, she reports.
People are watching.
There's two answers.
Watching, I wish they could see the look that Joni just shot Shawn.
I definitely don't report to Shawn. Just kidding. I'm joking.
There's two answers to that.
It's funny because, you answer that question.
Go ahead. Let's hear this. It's a great question. Go for it.
I report to you, right?
Yes. Yeah.
But when you have a, Shawn, you come up with the idea. Hey, I think we should do X. Joni, if you're like, no, I think that's a stupid idea. Is that okay, we'll just talk about it and we'll come to a conclusion, or is one of you the person like, well, no, we're going. This is the direction we're going in.
Shawn's usually the one that will point us in the right direction. He'll ask me for my opinion, and then if I say no, that's a terrible idea, he might still go with it anyway. But hey.
We're there, but this did not happen overnight. There's been a lot of disagreements.
Lots of counseling sessions, Mark. Lots of counseling sessions.
I think we should pivot in our conversation and go deeper on this. My VP, Jessica, she's kind of that operator. We don't use the terminology, but she told me one time. She said, "Mark, I was out to dinner with my husband and another couple, and my husband said, Jessica, tell us, like, what exactly do you do at Grace Management?" She'd been with us for like 6-7 years, and she's my VP. She's my right hand. She's the operator. Like, I love her to death. She does everything. And she was telling me the story, and she goes, so I thought for a minute, and I said, well, my job is kind of like this. On Monday morning, Mark comes in with 10 new ideas. I have to tell him that 9 of the ideas are stupid, but I have to make the 10th one work. And I thought, that's actually pretty good. Yeah, that's kind of what you do.
Yeah.
No, Mark, that's stupid. No, Mark, that's stupid. And then pick one of them and actually put it into fruition.
Yeah. I usually come up.
Joni, tell Shawn 9 out of 10 are stupid, and you have authority.
And I usually do.
She's Joni's really good at just getting crap done. Like I could. I mean, this has been for years because if you know our story, Mark, like we've been together since we started dating when we were 15 years old. We grew up together. We started everything together. But like even when we started in this as a real estate investment company or real estate investors, but Joni just she's been compared to like a tigress or a tiger. Like he's just that. So like I would come up with things and be like, hey, this is and he's done, and she would just go and attack it and get it done. And that's what made us really good together.
That's awesome.
And so and didn't complain, and just she understood the bigger goal and what we were trying to accomplish, and so she'll get it done. And so that's really. I don't know if I could have done all that without her. Like I couldn't have. So it was a good mix, and so it's still like that today. So I'll come up with the visionary, high level stuff. There's times where I'm like, no, I think this is the right decision, and then she'll come up with great ideas as well. She's been in this so long, so we bounce each other. But I think where we got off track a little bit, and we've talked about this on the show, is where. I don't know, was it maybe 7 years ago? Mm-hmm. Joni really had the passion and desire, and that's probably where she met you, to start speaking more, to start being the face of stuff and doing, and she had like a desire to branch off into doing other things, which really caused like a confusion and I think with us and in our business, because it was like, and I said, I did do that. I said I supported, I kind of supported, I said yes, but then when it interfered with the business, then I'm like, no, this isn't working. And then so I was like, well, you told me I could do that. I signed up for this 6 months ago. I'm like, well, 6 months ago that sounded great, but it's not great today. So like some disagreements with and how things, and I think it took a couple of years to kind of level off and find what the balance, like how could we feed that, but also, and her wanting to gain that I guess notoriety and speaking and running events and doing stuff like that, books and all that, which I have zero passion or desire to. That was the other problem, is like I don't care to be on social. I don't care to be doing this podcast. I do. I love the podcast, but I didn't want to I could just run a business and be totally happy. So it was a different dynamic. And so but we had to discover that. So that was the difference that, cause I think I lost my right hand of like the go-getter and the person that I could pass stuff off to get things done. And so it was an interesting dynamic. Would you?
Yeah, totally. Yeah. So we've been there, Mark, but going back to,
she wants to change the subject
podcast and our special guest here. So, Mark, what one question I wanted to ask you is, what's the number one mistake you see property management business owners make that keep them stuck, really?
Well, let me break that into two segments. I think the biggest mistake of new companies when they're just starting off is they focus on so much. Right? I got to put my systems in place. I got to have my processes lined up. I need to document everything. And when I'm talking to people just starting, my recommendation is no. What you need to get is 50 doors. Until you have 50 doors, you have a hobby. So you don't worry about any process, any system, nothing. I mean, yes, get your lease agreement in place. You need to be able to sign a lease and get your management agreement in place. Go get 50 doors. Yeah. Write 50 on a sticky and put it on your wall, tattoo it on your arm, wake up to it every morning shouting 50 and going to bed screaming 50 because that's all you can think about. You have one sole purpose, get 50 doors. The systems and processes will figure themselves out. But you got to prove you can get some doors.
Yeah.
So early on, it's tunnel vision to 50. That's all that matters. You don't do anything until you get 50. That's that group. Now, the other group, what's the biggest mistake once people get more established, I think, is they forget to raise the bar on the quality of owner client they're bringing on.
Oh, yes.
And they make it the idea that I just need more doors because we do need doors in the beginning.
Any doors.
50. Any doors. That's right. And yes, the first 50, you take anything. You take anything because you got to prove that you can do it. But then you got to raise the bar. Then you have to recognize not every client is the right client I want to be in business with. And so I'm going to say no to some clients. And that's a really hard transition to make. But it's necessary. And everybody does make it. Eventually, everybody recognizes, gosh, I have some clients that I probably shouldn't have brought on. The only question is how soon will you recognize it and start to raise that bar. So we've been very intentional about understanding that this is a relationship-based business. And we don't want to be in a business relationship with everybody that calls us up. We're not selling anything, right? If I was selling a pen, I really don't care about the quality of the person I'm selling it to. But I'm not selling anything. I'm entering a long-term business relationship that will go on for years and years and years and years. So therefore, I need to make sure that I set proper expectations and I say no to the people that are not going to be a good fit for us or that are high risk, and only work with the people that will be a good fit and will work well with us. And so I'm going to grow slower because of that, but that's where the durability and the long-term relationship side can make this sustainable.
Yeah.
Well said.
Well, I would love your perspective. We're going to get into what the recent moves you made, but where do you think where is the PM space headed? I mean, we had some big visionaries at that conference a couple weeks ago, but I would love your 2 cents. You've been in this industry a long time. You know a lot of people. I think you really understand it really well compared to most. So tell me where you think things are headed.
I think there are structural changes happening right now in our industry that we haven't seen in the past. And I'm not some like Chicken Little, the sky is falling type of a thing. I hate that. You go to conferences and people are like, hey, if you don't do this new thing, you're going to be out of business in 2 years. People have been saying that for decades, whatever. But I do think there are structural changes to the residential property management industry, third party, that we haven't seen ever. And that mostly like around legislation and around compliance, because housing is now viewed as a right, right? If a person has a right to something, then what right do I have to dictate terms, price, fees, whatever you want to say? And I think we can compare our industry to the health insurance industry about 15 years ago, to the property insurance industry and what's happened there the last couple of years, because those things are now viewed as now the government's going to have more oversight on that. You insurance companies can't dictate this. So if we look at just property insurance companies in many states, the states sets the profit margin of insurance companies. I mean, think about that. They set your profit margin. They set your rates. They determine what you can charge and can't charge. These are companies just like yours and mine. What's the difference? They're insuring the property. We're in property management. So that's the direction we're heading, is there's going to be more and more of this because of the fact that housing has gotten too expensive. And so the legislatures have said, hey, we need to tap down third-party property management. And I live enough in that world, in that side of things, to understand their viewpoint. And boy, if I'm coming at it from their angle, there's a lot of things you could do to cause us to come under higher levels of compliance and drop rents. What's the best way to drop rents? Well, if Shawn and Joni and Marc can only charge half of the management fee they're charging today, does that drop rents by a few percentage points? You could make that argument. Now, we know that's not true, but you layer all this stuff in, and it's happening. Like it's happening right now in Colorado and in California and a lot of eastern states. And even like you look at, I know we're not getting political here, but Trump right now, his proposed legislation would disallow corporate investors from owning residential real estate for more than 7 years. Now, Trump should be the most pro real estate investment president ever, right? I mean, that's how he made his money. And he's coming out saying investors should not own it for more than 7 years, or they should be required by federal law to sell it. Now, that condition just yesterday, I think, got stripped out.
Wow.
But that's the mentality. That's the sentiment. That's the sentiments that's coming down on us from all areas. So we just have to acknowledge that. And I'm not saying, again, the sky's not falling, but that's the shift. That's the fundamental change that we have to acknowledge. And so the questions we have to ask ourselves, and this is what I spend some of my time doing, is, okay, therefore what? The answer is not to say, well, then I need to go to Washington and get them to change the laws and be more landlord friendly. I think that's a stupid waste of time. That's not going to happen. It is going to be more tenant right stuff. That's just the reality. So therefore what? How do we position ourselves to live under that new sentiment? And absolutely we can do it, but it's going to require some shifting. And we're seeing our industry do it a little bit right now with things like transparency, which I'm all for, and fee restructuring fees dramatically restructuring the fees. A book I'm reading and an area I'm studying right now is Vanguard. Vanguard, the mutual fund company. Decades ago, they pioneered zero fees for mutual funds. It used to be this massive fee, and they were like, no, how can we do it at zero fees? And so they totally turned the industry upside down at the time. Those are the kind of things, Joni, you asked how I spend my time. Those are the kind of things I want to figure out is, hey, how do we stay ahead of the kookiness that we're getting hit with, and restructure our business, because we're not really liked right now by a lot of tenant advocacy groups. And I disagree with that. I think we should be. I am pro-tenant. I am pro-landlord. So how do we present ourselves and the service we provide so that people say, yeah, what you guys are doing is really needed and fair priced, and we represent tenants well, we represent landlords, and I think that's the shift. That's a really long answer, Shawn, to your short question, and you kind of got me on a tangent.
No, I love it because this is the stuff we face day to day, and I would love to. We need to get together again another time, and I would love to go deep into that.
It's more I can say when the camera turns off.
Yeah, because how could we?
I don't want to give the other side any more ideas on the things that I think they should do.
Yeah, but and we talked about that. Going to managing. Could you survive if we go to a zero manage for zero? But then I think there's other things, and begin to pivot. And that's a discussion we should have at another time. But I think I appreciate the feedback. How does that look in your opinion for you guys have owned real estate as well and been on that other side? So that's good. Answer that same question or that same book from the landlord perspective. Let's not talk about property management companies, because we do have a lot of listeners that are real estate investors. So how does that impact them as well? With that same legislation and compliance coming, because they're also looked at as evil.
Yeah.
Even though they're providing the housing, but
Yes, I love real estate. I bought my first piece of real estate when I was 21 or something. So 30 years ago. So I love real estate, but I also recognize that I can never let my passion for investing in anything override my discipline in anything. right? So I don't think right now in most markets is a good time to buy real estate. And I just had this argument with a fellow property manager friend of mine the other day. I'm not spending my money on investing in real estate right now because I think it's overpriced. I want to buy things at a discount when I can get a good return. And I don't think as an investor in my market, at least, and in many other markets, the numbers don't pencil out. They just aren't there. And you can't manipulate your way into that. So what do I think the future looks like? I just yesterday, I'm kind of a numbers nerd on some of this stuff. Somebody was saying, Mark, but real estate always goes up. Like, look back to the 70s. It's always going to go up. So long term, do it. Well, interest rates in 1970 were like 19%. 19%, Shawn. That's probably before the two of you guys were born. You guys are so.
Yep,
so
it
young.
Was.
Okay, so they've come from 19, and then they went all the way down over 1970, 80, 90, 2000, 2010, 2020. So it's 50 years, okay? So in 50 years, interest rates went from basically 20 to 2.5, okay? Home prices over that same point in time went from an average of, I think, was it 55, 65, somewhere around there, to peak at about 440, okay? The percentage, this is what's so interesting to me, the percentage change in interest rates over 50 years was like 550%. Interest rates it was a 550% swing in interest rates. You know what the housing appreciation percentage change was over that same period? It was 550 on homes or on interest rates. Homes were like 540, 540%. It's like right there. Percentage for percentage for percentage. Interest rates go up or go down, home prices go up over the last 50 years. Okay, now where are interest rates now? They're very, very low. And I know they were 2.5, they're up to 5 or whatever. The question is, if home prices are going to continue on at the same rate they've been on, they have to do it independent of interest rates. So really the question we have to ask ourselves is, was there a correlation to interest rates coming down 500% and home prices going up 500%? Was there a correlation or not? And if the answer is yes, that doesn't paint a good picture for the future of home price appreciation because interest rates don't have much further to fall. We got to 2.5. There's only one direction to go from here. And we've seen it the last 3 years, up. If that continues on, what's going to drive home appreciation? Because it can't be interest rates. It can't anymore. Now, you could say, well, that's irrelevant. That's a correlation, not a causation, Mark. Has nothing to do with each other. Okay, maybe so. I don't believe that. I think those things are tied pretty closely. So therefore, where am I going to put my money? It's hard for me to put it into real estate. And by the way, we're telling our investors this. Like, this is a hard conversation. I'm in the business of third-party management. The last thing I want is all my clients to sell their homes. Yeah. But we are going to a lot of our clients and saying it's time to reposition, or the game has changed fundamentally, and so you need to rethink your investment thesis. So that's why, talk about how we're looking at this, we're working more with accidental landlords now, people that would prefer to sell, but they can't. And so they're going to convert that property to a rental versus going after investors. So I'm, at least in the the midterm, I'm not super excited about real estate. And I love real estate. So that's why I think it means something to my clients when I say that, because I love real estate, but I love making money more. And I'm not going to buy real estate just because I love it. I mean, that's silly. I go where the return is. And so money goes where it is treated best. And money is not treated well today, in my opinion, in residential real estate investing. Yeah. Could that turn around? Absolutely. Do I hope it turns around? Absolutely. But I don't think in the short to midterm, in my, just my opinion, it's just me, I'm just one guy, but in my opinion, that's not where I'm putting my personal funds today.
In your perspective, how does that translate with inflation and like just the cost of building though?
Yeah. So if we graphed this, I'll have to send you guys this graph. It's fascinating. That graph I just talked about with interest rates coming down, home prices going up, I graphed that side by side. And it's just perfect until 2021. And then the opposite happened. Then interest rates went up and so did home prices. Well, gosh, why did that happen? Because what you just said, Shawn, right? COVID stimulus. We dumped a whole bunch of money into the economy. And so the Fed tried to raise interest rates to counter that, and home prices went up. Like, so that is that an anomaly or is that the new normal? Who knows? But yes, I think if money keeps getting dumped into our economy, then assets, sure, they could keep going up. But are they going to go up another 500% over the next 50 years? If they do, it's independent of interest rates. And now what the Fed's talking about is raising interest rates.
Correct.
They're not talking about dropping them anymore. Suddenly the conversation has flipped to maybe we need an interest rate bump. Well, what will that do to real estate prices? I don't know, but I don't think it's this clear crystal ball like it was 10, 20, 30 years ago of, hey, real estate only has one direction to go, and that's up. That's just not my opinion.
Yeah. Wow. It's an interesting conversation.
Well, we can go on and on with this.
On that same note, though, I don't see the government. It doesn't seem like any side wants to balance the budget.
And then you factor on top of that what I just said a few minutes ago about the government's opinion on investors. They don't like investors. This whole bill that the Senate just passed yesterday, or the House just passed yesterday, the Wall Street Journal article said it is anti-investor. It's laden with anti-investor terminology or something. They don't want us. The government does not want people investing in real estate. So they will now layer things on to preclude that from happening because they think it drives the pricing of homes up.
Yeah.
Which who knows if it does or not, but that's their sentiment. So you start layering on all these things on top of each other, right? The regulation gets higher, the rents don't keep going up, expenses keep going up. At some point, the teeter-totter, in my opinion, you have to acknowledge that, gosh, is this still the best place? And that's the answer. That's the question for me. What's the best place to put my money?
Yeah.
And I don't know if real estate is the answer today.
And I think the baby boomers are the largest. I think they're still the largest owners of single family homes, but like they're doing everything they can they are voting with respect to keeping that value up though as well. But like, they don't want to lose the value of their biggest investment. And
I don't think things are going to collapse. That's not what I'm saying. I think things will probably, this is what's happened in Colorado. What's happened the last 3 years? Prices have grinded lower for 3 years now. I think that's what we'll see. We'll just see a continuing grinding, down 1%, down 2%, maybe up 1%, but down another 2%. In my market, that is what has happened 3 years ago. So our timing actually worked out pretty well because we sold a lot out of a lot of our stuff 3 and 4 years ago, and I'm glad we did. Looking back.
Yeah.
Yeah.
So I know you have a heart out.
How's that for a gloomy answer?
Let's do
on that note.
On a positive note.
Let's get into the fun questions, Mark.
Yes, selling your business. So and really selling out.
Mark's like, that could be another 20 to 30 minutes, Shawn.
Just get into that. Like, can you just on high level, what transpired into you guys deciding to exit? How did that look? And was it everything you thought it would be?
It wasn't some grand plan. We weren't for sale. We weren't out shopping the company around. It was, again, goes back to what we opened with. Right? We're opportunistic. So it was very much thinking ahead 5 to 7 years, making decisions today based upon what we think is going to be best for the business and the family, quite frankly, in the next 5 to 7 years. I'm not getting younger. Shawn, you met my dad. He looks like he's getting younger, doesn't he? But he's actually not. Yeah. And so some of it's thinking about the future of the company and where do we want that direction to go? How do we protect the company and make sure that the company propels forward for another 50 years? So there was a lot of that just kind of floating around in my head. And I've known the guys at Rhome for many, many years. And I get together with them every so often, like we all do. And so we got back. I was together with a few of them, or one of them, back in late 25. And I just said, I said, hey, I'm thinking of the future. I'm just curious. You guys say you're interested in buying us. Are you really? like, do you mean that, or is that just something you say to everybody? Right?
Yeah.
You tell all the girls that, or and he was like, no, we really would have interest. And so I just said, I'd be curious to explore that. I'd be curious to explore what that would look like, what it would look like for me, for the company, what the numbers would be. Like, I'd be curious to explore that. And so we started having that conversation. And the more we talked about it, the more I thought, this could really work this could check a lot of boxes, right? This could take some equity off the table, de-risk a little bit, because that's where the most of our family equity is. It could set the company up for the future. I don't want to be done yet, so I'm not out yet. So this could kind of give me continuing to do what I enjoy doing. It could set our team up with additional resources, right? Because we're right in that mid-size where we're not big enough to have a tremendous amount of resources, but we have some. And so the more I talked about that, the more I thought this could work really well. And so I was convinced. I thought this is just what we should do. So I went to my dad and my brother, and they knew I was having these conversations. I said, hey, here's, within my role of CEO, this is my official recommendation to you guys, the board, because we're all shareholders. I think we should do this. I think we should sell, and here's what it would look like, and here's why. And it would give Dad some equity to ensure he's protected now in his retirement, and it would allow me to continue on and my brother to continue on in our same roles. That way, it protects the company, gives us more resources for our employees in the future that way. And we talked about that a little bit. So once we got to that point, quite frankly, it really wasn't that hard of a decision. Yeah. It was just kind of looking at it unemotionally and viewing our business as an asset. Right. And what do we do with this asset right now? And this seemed like it made the most sense. And so we made that decision. And only took it. I've been thinking about it for years. I've been thinking about this stuff. So it wasn't like I'd never considered it before. Made the decision. And happy to talk about kind of the process that way, but it was a pretty smooth process, and we closed April 1st. And since we closed, Shawn, I think you'll find this interesting. I think maybe you and I talked about this. Closed on April 1st. There hasn't been even a moment since we closed where I've second guessed or thought, was that, should I have done that?
Decision,
was that,
right.
Which surprises me. I thought there would be. I thought there'd be those days or those moments where you're like, what did I do? But there really hasn't been. I think it was the right call. Yeah. I feel very good about it.
That's what I was going to ask. I'm surprised there's not been that moment. Yeah. Or just you it's done, so you can't go back. Just the second guessing yourself. But yeah.
Well, congratulations. Yeah. That's awesome.
Thank you.
Then you made the right decision for sure.
Yeah.
So
I think so. Yeah. I think so.
And it's awesome. I'd love to hear in a year from now that
looks.
If you still have that same sentiment. So
yeah. Well, I'm in the same role. I'm not going anywhere. So ask me in a year.
We'll still see Marc around.
Yeah. That's right. That's
nice.
Right. You will.
Well, Marc, just a couple of closing questions or fun questions. So if you could go back to your early 20s, what advice would you give yourself?
I tell myself, and there's a long story here that I won't even get into. I would tell myself, don't buy the mini storage. And I know you guys own the mini storage.
We do have one, and I know you do. I want to sell it, to be honest with you. Yeah. So, any buyers out there?
That's the worst financial decision I ever made. We bought a mini storage, and if we had more time. When the three of us get together, because we're going to do that at some point, I'll tell you the mini storage story. So yes, it was a long story. We overextended ourselves, bought something we shouldn't have bought, and lost our shirt on it. That's my big regret. But I learned a lot, Joni. I learned a lot.
Nice. We all do, right? Awesome. Last question is, what's your next? What does the chapter after Rhome look like for Marc Cunningham?
I don't know. This is interesting. When we were thinking of selling, you hear a lot of people say, when you're thinking about that, you never want to run from something. You always run to something. You got to know what you're going to be doing, because you hear the stories about, I sold and all my identity was wrapped up there, and then I didn't know what I was going to do, and I just floundered around. I understand that. I understand that thinking. However, I also know myself. I'm not a lazy person. I go. So I don't know what's next. I mean, right now I'm still in the same role I'm in. What's next beyond that? I don't know, but I'm okay with not knowing. Because I don't think I'm going to figure out what's quote unquote next until I would give myself space in the middle to kind of step out fully and say, okay, let me clear my head and kind of shake the cobwebs out and figure out what's next. So I don't fear that idea of, I got to know what I'm going to do or I won't make this decision. I think you make the decision, whatever it is, based upon the information in front of you. And you don't worry about, but what about way down the road? What about step 10? Well, you're only on step 2. Don't worry about step 10. Just focus on step 3. So step 2 for us was, let's sell this business. And we knew what step 3 looked like, and maybe even 4. So what step 10 looked like? I have no clue. But I'm confident that I'll figure that out when we get there.
Nice. Well, we love watching your
cop-out answer.
Yeah, it's all right.
It's honest.
And we love hearing your journey, Marc. So thank you again for joining us. And how can our listeners find you and get a hold of you?
Our company website, pmbuild.com for Grace Management. And then our PM education site is pmbuild.com. So those are probably the two best ways to reach out to me.
Awesome. We'll have that all in the show notes.
Thank you. I appreciate your transparency. It was a fun conversation. We'd love to have you back someday and follow up on this conversation. But someday that we're in Denver, or if you ever come to Houston, please let us know. We'd love to take you to dinner.
Would love to. And I'll tell you, to kind of come full circle in our conversation, I think it is so cool what you guys are doing. Running your business the way you guys run it as a husband and wife, that presents a lot of challenges. It really, really does. It's not just a family dynamic. It's a husband-wife dynamic, which is a whole nother layer of challenge that way. So I think that is so inspiring and so cool what you guys are doing and have done that way. And then for sharing with people your experiences that way. So thank you guys for doing that. It's impactful.
Yes.
Thank you for that.
Appreciate that. So again, anything we can ever do for you, please let us know. But until next time, we'll see you all next week. And Mark, thank you again for joining us today.
See you, everyone.
Thank you, Joni. Thank you, Shawn.
You've been listening to Inside the Wolf's Den, an entrepreneurial journey with Shawn and Joni Wolfswinkel. Tons of entrepreneurial podcasts are out there, talking. But Joni and Shawn are living it every single day. Their portfolio now includes many franchises and medium-sized businesses. We talk about the trials and motivators of successfully running a business. Join us again soon for another podcast. But until then, reach out on the website at InsideTheWolfsDen.com, on Facebook at Inside the Wolf's Den, on Instagram at Inside the Wolf Den. We'll see you again soon. This is Inside the Wolf's Den. We'll see you next time.